Welcome, ladies and gentlemen. We're back to the New York Lives yet again. It's Wednesday, and we've had ourselves some nice bouts of information coming out for Bitcoin and the dollar. Things ain't looking too good there. Unemployment claims coming in a little bit lower. That's bad news for the Fed. Why? Because there's more people in work. But more importantly, Greyscale successfully smacks up the SEC to get the approval of an ETF for Bitcoin. Now we're going to get that Wall Street money. But how soon are we going to get it? That's the question. See, it was similar to what happened before. BlackRock ETF, bang, Bitcoin moves up. Happy days. The bull run is engaged. It comes back down. Now Grayscale has successfully managed to get the ETF in principle ruled in their favor. So hopefully we're going to start seeing some Wall Street money coming into Bitcoin. It's the only way Bitcoin, in my opinion, can really make another all-time high. We need Wall Street money. We need endorsement. We need people actively playing the game of Bitcoin, not crypto, Bitcoin. You know, too much BS has been happening in cryptocurrency, man. It's full of scandals and what have you. So, but Bitcoin is always going to be the guy that wins. So in today's live stream, got a couple announcements to make in regards to the Traders Reality website and the Patreon. And then once we've finished with that, we're going to be diving into the charts to work out what is going to happen next. Ladies and gentlemen, as always, Bitcoin will only move when I finish the live. And that's the truth. Let's have a conversation, gang. All right, then. So firstly, got an announcement to make to you. Two things. This is the last chance to join the Patreon. Everything you need is in the description of the video. Reason being is because we're coming away from Patreon, and from the first, we're going to be putting a cap, so you will no longer be able to join the Patreon. Once you do join the Patreon, you will then get access to certain benefits on the website. We've got a few things building up behind the scenes, live trading rooms and what have you. We've got a lot that is going to be rolled out on the Traders Reality website. Now, if anybody is new, passing through, and they want to make sense of this hybrid system that I'm talking about, get over to the Traders Reality website, go to the top part where it says courses, and take advantage of the free course that has been rolled out. 1,326 people have given themselves 1 hour and 10 minutes to understand the hybrid system. Look, these modules right here, you can see I have got, well, turn that down. I've got all these modules right here, from the patterns, moving averages, what is volume, the pivot levels. This course is designed to get you aligned with the tools that we use, because if you don't know what you're using, how are you going to make sense of what price is likely to do next? All right? So it's free to do. Become a member. That's cost you nothing. Get acquainted and use this course and get involved in what is being provided for in this course. There's lots of information in this, all packed into an hour and 10 minutes of your time. All right? Cool. Wicked. Let's get with the flavor. Come on. All right then, Bitcoin. Now, this was a little bit of a projection that I shared to the patrons of the channel. This was in the extensive breakdown last night where we were talking about what we needed to see Bitcoin do. And it was actually this video right here where we've got Bitcoin recovering. I was basically talking about the idea of what I anticipated Bitcoin to do next from this zone. So it was around this point right here where I'm talking about retraces are required. Now, this is where we come into the idea of 50% of the vector candle. Okay, and I go into this detail about how to really take advantage of using this approach with the hybrid system. Now, the hybrid system is all down to what way you're going to use it. All right, if you're a scalper, that means 1 minute time frame all the way through to the 5 minute time frame. There's strategies for you. If you're a swing trader, 15-minute time frame going all the way through to the daily. That's where the hybrid system can help you. Now, remember, you've got in front of us right now, just to put it into perspective, we've got this big green vector candle right here, okay? Now, the 50% retracement of the vector says that when you mark off the high and the low of the candlestick of the vector, principle would say that the midpoint is where you are looking for bounces, which would be the green vector candle continuation, all right? What you've got to be aware of is where you actually mark the 50%. Look at this move to the upside. No retraces. So when we look at this, we say to ourselves, okay, hold on. Maybe if I were to mark off the 50% of the vector at this point, would logic say that I'd be expecting to go long from this zone? No. Why? because the move is very extended. Look at the moving averages. Expanded out. It's clearly a deviation away from the average, okay? Expansion. Something's happened. So naturally, there's going to be a recovery. How much of a recovery is a different story. That's where we go into the next vector, which will be this one right here. Take the high, take the low. Now you have got a valid assumption based on the world of probabilities. How likely is it that Bitcoin is going to come down to test this? Now, you might already be in longs. You might not have any positions. So the person that's already in a long might be thinking, well, do I wait till price comes back down to close my long? If he went long from this point right here, he's sitting nicely. But this area right here, in principle, is a reactive zone. Why? Because the principle says that when this candlestick started to pump, market maker was inducing retail traders to go long. That means he was selling into them. So he's building his shorts as high as he physically can. Now, he may have been building his shorts from this point, because that's what the 50% of the vector says. It says that we assume that at the midpoint of this candlestick, when it became a vector, or at the time of it being developed, we assume that this is where market maker got retail traders to believe prices was going higher. So we assume that if price comes back down to that point, we would get an initial bounce. That's what we assume. So retail traders in principle, or hybrid traders, would be going long inside of this zone, because we want to confirm when price hits the 50, the continuation of the green vector would then send price back up. But what if you're in longs? You'll be then asking yourself, do I add to my position, or do I get ready to close it? Well, if you were long from this point down here, guys, right, you would use this in principle as a stop loss to bank in the gains that you made on this move. If it hits it, no qualms. You've got to just accept that's the truth of trading. You can't do nothing about it. Just because it says, the principle says that this is the midpoint where we would expect Bitcoin to bounce from it, and it doesn't, does that invalidate a system? Does that invalidate your analysis of what's going on? No. Because it's either going to bounce that point or not. It could actually break it, shake you out, and then reverse. At least you've banked in your profit. When I take a trade, I'm always looking for the next opportunity. That means I'm looking to get out as soon as possible. That's my style. I'm a scalper. Fast in, fast out. Bit like my dates. Now, more important. Nah, I'd take that back. What a guy. But that's the logic of the midpoint of the vector. Now, go into any other asset and put this to the test. Let's go to Euro. Here's an example. So, we have got Euro. It's made the move up, okay? We got retraces, which is what we wanted. On the higher time frame, Euro showed a vector inside of this zone, okay? Here we go. Come on. Come on. There we are. Now look. Look at this candlestick, right? You take the midpoint of this vector. Logic says, if you're already in longs, if it comes back down to here, you would assume it's going to bounce back up. But there was no retrace. Look at how minimal that was. So there's lots of strength in this move. With the confluence of the 50 EMA, the 800 EMA, the fact that Euro is heading into a very, very important zone of support. The fact that the dollar itself, with all the news announcements, the dollar itself has been taking a little bit of a battering. But the problem that we've got with dollar is the fact that it's leaving us clues as to where it's likely to end up. So if you're running longs in Euro, or you've got a bias in Euro to go higher, or if you're going long on assets paired against the US dollar, be careful, because dollar's leaving us a clue as to where it's likely to go. Okay? We're looking for support because dollar is heading into very interesting areas of support. The news that's just come out right now has pretty much smacked it. Unemployment claims lower than what they had anticipated. Sorry, the non-farm employment change, lower. So there's a slowdown. But the problem that I have got is when the unemployment claims comes out, it will show that there are less people claiming benefit. So what's going on? There's a bet amongst traders that the Fed's going to increase the interest rates by another 25 basis points. And they're around 82 to 84% convinced that that's going to be the case. So the markets are pricing that in. Okay? Now, remember, when interest rates increase, it means that the value of the dollar should be going up because foreign investors are going to be looking at adding their portfolios with the exposure of dollar, okay? Going into the yields, they're taking a smack to the downside. Looking at NASDAQ, you can see it's holding out on the VWAP. So I'm going to be talking about that very shortly, but the yields are going down. That's good news. As long as yields drop, it improves the odds of Bitcoin going higher. Why? Because if Bitcoin follows the NASDAQ and the S&P and the overall Wall Street game, then we assume that Bitcoin will see the success of the yields going down because investors are coming into the bonds and loading up on the government back, okay? So now bonds are going up. That means government is getting access to people's money. That means government is now going to start putting it to work. That means that the yield itself has to come down because they've caught enough people with interest and they can't really be advertising too much of a great return on a 2-year bond. So people are picking up 2-year bonds. Naturally, the yield will then come down because there is now a demand for it. So they now reduce the rate of return until it then goes back up again. What instance could that be? News announcements, something catastrophic happening in the United States, who knows? Florida, we've got that mad hurricane, tornado, whatever's going on, all right? Mr. Dutch is sat in the middle of it, so be careful, bro. Alan, what's good, man? What is happening? Tino, what if we are short from 28K? How do we go from there? Shoo has asked a very good question. Cool. So let's go back into Bitcoin before I start diving into this madness with Greyscale. Check this out. So if, say you're short from 28K, you would have caught yourself a nice flavorsome move right there. This is what you're looking for. Actually, how many of you are actually short? That's the question. How many of you are short? Let me just refresh this bad boy up. Here we go. Right, cool. So how many of you are actually short right now? I want to see. Because I'm going to get to the point about it. Type 1 if you are short. All right, then. Here we go. So we've got a couple of guys short. 1. So a few people are running shorts. All right, then. So what you are thinking now is, what does Bitcoin effectively need to do to invalidate the idea of it going higher? See, when you're looking at certain situations, you've got to say to yourself, well, what am I seeing more of to make me believe that it's going to happen? Or what am I not seeing more of? All right? So let's assume you're in a short from the 28 zone. Let's round it off. You're short from here. Bitcoin yesterday hit the high average weekly range. That's where I projected it to come back down. You expect to retrace. That's the case. Okay? Now let's assume that your liquidation, hypothetically, is going to be around the 28,500 zone. Let's assume that's going to be the case. What will need to happen? Well, we've got a huge imbalance in Bitcoin right here. That's a problem because it's a huge area of interest where market makers smack price up. You only need to go to the 1-hour time frame to understand that. Look, it's huge. It will take a lot of strength for Bitcoin to mark up from this current point, okay? Now, the market opens in 15 minutes. That's what we need to be aware of, okay? Now, we go over to the high block. No, not the high block. We go to the Bookmap. And we can see Bitcoin is toying around this Bookmap VWAP itself, right? You see this white line? It's toying with that VWAP. Look down below. There's clearly interest from limit buys trying to support this zone, okay? We zoom out on the order book and we say to ourselves, well, how likely could Bitcoin go up? 2 things. We can assume the liquidity that is up there is a point where Bitcoin is likely to go. We can also assume that if it can't break above the VWAP, where will the interest come in from retail or investors, hedge fund managers, you name it, that are placing orders in the order book? Look at this area right here. Lots of people have committed. That means this could be an area of strong support. So we've got the idea that that could be the case. All right? Let's go back into the chart to understand what the story is. So if Bitcoin is going to show the chance to move higher, we go into smaller time frames to work out where's the strength going to come from. So look at this. 50 EMA. Tight. Not interested in that. 200 EMA. Tight. Not interested in that. 800 EMA. The guy that's in a short right now needs Bitcoin effectively to stay in this range. Okay? He needs it to stay in this range. The NASDAQ needs to drop for Bitcoin, in principle, to continue to drop. Now, Bitcoin could be leaving a few clues behind, right? We've got this 800 EMA right here. We've got the midpoint of the vector on the higher time frame, which sits at 26,870. Where's the daily open? The daily open is right here. Now, Bitcoin hasn't tested the daily open. Now, this is where the short seller is going to be thinking, might be getting a bit compromised, because Bitcoin may have the luck to actually go and test that daily open. Because think of it like this. Retail right now has missed out on a move on Bitcoin. So what's market maker going to do? He's going to make them think it's now going to continue higher. Now, that could be the case because everyone's trying to run in. Market maker's always going to try and get his dollar filled, all right? Next pool of liquidity sits at around the 28,600, all right? Let me just fix this bad boy up here. Keeps doing it, man. It's winding me up. What have we got? Liquidity-wise, we got $3.5 billion worth of short liquidations up inside of this zone, right? Now we've got this liquidity down here at 25,700. So market maker, in essence, is going to be saying, right, who am I going to get more interest from? Clearly going to get more interest from guys going long. Let the short sellers get squeezed out. That's the truth, my friend. That's the truth. Bitcoin could actually continue back up from this point, okay? So this is where you then ask yourself the question, what do I do? So let's assume that your liquidation point is at the 28,500 zone, right? From this point where your position is at right now, you might have $300 worth of gains or $1,000 worth of gains from 28. I'm assuming that you might be using high leverage, for example, all right? Go from your liquidation and don't let your liquidation point be your stop loss. Don't let that be the case, all right? Because that's just burning money. You don't need that. You need to put a stop in place. If you are new to trading, you've got to get used to accepting how much money you are prepared to lose. When you've got that red line going across the chart, psychologically it's telling you, this is where I'm happy to take a loss. The second you move your stop, you should close your trade, because then that means you're getting prone to start moving it again and again and again. And you're not going to be in a position to fight the market, because the market will always win, okay? So let's assume that your liquidation point is at 28,500. You went short from 28. Happy days. You've got $3,000 worth of profit banked inside of this zone at 27,397. What I like to do is I like to work out, where am I going to change the idea that I'm right or where I'm wrong? Check this out. From your entry point, okay, or where your current profit is right now, all right? There's two ways you can do it. You can either do it from your entry or you can do it from where the profit is right now in your move. So let's assume that you're in a profitable position. I'm going to take that zone and mark it all the way up towards where my exit is, 28,500. Let's assume that's the stop, okay? Now I've got this zone right here, which is the 27,753, which is the midpoint from where I've currently got profit in the chart at 27,400 to my exit or liquidation point, which will be 28,500. Inside of this area, so just to make it clear, it's the 27,968. Let me get rid of this. Cool, all right? So that's that point right there, 27,968. That's the midpoint from my profit to my exit or liquidation. If Bitcoin makes its way up towards that point, I've burnt money. Why? Because I had a profitable position right here. I could have closed the trade and run along towards that point on the logic that they're going to test the daily open. But you might have been in this short for a little while. So I don't know. But I'm going to assume that you went short from 28. Someone might have gone short from 35, okay? And they're waiting for it to get to a certain level, or they may have gone short from 26, and now it's that short. They've added to their position and gone short again, which has averaged their position to go to 28, whatever, okay? What I'm trying to convey across to you all is the management of when you need to behave. When do you need to act? And you've got to be used to just switching up the narrative. Because if Bitcoin makes its way back up towards the daily open, all right, you've burnt money on the table that you already had that you didn't know you were going to have, okay? You're now getting closer and closer to your entry point. Now, if the strength is valid and the idea that market maker is going to continue with this pump to the upside on the excitement of Greyscale smacking it with the SEC, The logic says that if they go beyond the daily open, you are effectively looking for confirmation that they're going to go up, retrace back into that zone. Why? Because this area is consistent with them selling, because that's where they last sold from. Okay? So you've got to give it a chance to show the proof. Another way of verifying that proof is going on the idea of vectors. When you see price moving up and vector candles come in, when you see these clusters like this, you see this? Green vectors, red vectors trying to come in. If they show you a green vector and it comes back down and holds, even down to the 5-minute time frame, just look at this. Take a midpoint of the Fibonacci, take the high, take the low, and look at where they actually reversed from. You've got to give it room, should I say. Look, they come up, gone into the midpoint, back up, and they held around that zone. If you were going to run along from here on that 50% of the vector strategy, you would then place your longs inside of this zone right here, and you'd be setting your exit, your stop, not your liquidation, your stop will be outside of the structure, okay? That's what you're looking for. Now, if you are in the short and it does end up going to the daily open, you are waiting to see if the 50 EMA can work its way up towards that point to verify a test of that zone, okay? We know the liquidations are currently at 28,500, okay? And there's about $3.5 billion worth of short liquidations over there. If the tone across the marketplace is to go higher, then they will clear that range. The only way that we can validate if Bitcoin is going to go down is we need to start seeing vector candles appearing on the attempt towards the daily and start selling off from that zone, similar to what they did over here. All right? We need that volume. We need that proof, like NASDAQ. I'm looking at NASDAQ and S&P. They ain't really giving me anything but holding around the VWAP itself, okay? Going into Ethereum. Does that make sense? Does that make sense? Bitcoin will pump, mark my words, 28.5K today. Okay, cool. You know, Jesse Livermore was the boy. Jesse Livermore. Love that guy. You know, kind of killed himself. Something about his missus, committed suicide. But you know what Jesse used to do? Every weekend, he would get locked up in the bank's vault with his money, right? And he would break down the charts. They would leave him a bowl of water and some bread, and for the whole weekend, he'd be sat in the bank vault with his money. And he said the reason why he did that is because he needed to visualize where he was putting his money. He needed to understand. If he was going to put 500,000 into a stock, he needed to understand and visualize it and say, right, that's a lot of money, okay? And then he's going to take a certain amount on how much he's prepared to lose from that, and then he will break it all down. Go read Reminiscence of a Stock Operator. Go read that book. Unbelievable. What else you got? Any news on the leaked doc on X Twitter accepting crypto payments soon? Just reading something on it. Yeah, look, listen. Well, if it gets leaked and the market is aware of it, it's already been priced in, if I'm honest with you. The same reason why we get a Bitcoin ETF or Greyscale and look at this hyped up move to the upside, Bitcoin then rolls over. All right? This is the way the metrics of the marketplace work. Okay? Tino, mate, when you can check altcoins, can you check VRA for me? Appreciate it. On that note, let's check out the altcoin marketplace. Where we at? I'll have a look at VRA in a second. But look, Bitcoin and Ethereum unusual volumes coming in. Look, we got low volumes, double digits. 25 million, 33 million, that's dog. I'm not interested in that. Why? Because I need 300 million. This is light liquidity, okay? That's because the market isn't open. Market opens in 4 minutes. We should start seeing the liquidity coming in, okay? Going down below, we've got altcoins. Tomo's been doing some good. Cyber. Let's have a look at these bad boys. So, let me have a look at VRA for my guy. VRA, USDT, Veracity, whatever. Veracity. Fucking mad names. All right, choppy. Very choppy. And it's hard to trade these, man. You know? It's very difficult because if you're in the wrong trade, that's it. You're getting wiped out. But you can premeditate the behavior of an asset. Always look to the imbalances of the moving averages, all right? Look at the way the vectors are printing, okay? Right here. Green vectors are coming up. All you got to do is just formulate a structure. They've been dropping it down. First clean green vector candle that appears above the 50 EMA is that right there. Okay, that's what you're looking for. Now, I know I'm talking in hindsight, but go back and do it. Apply it into your trading. Wait for the first green vector candle that appears above the 50 EMA. We had it a minute ago on Bitcoin. Look, let me fix this up. There we go. 5-minute time frame. What have we got here? First green vector candle that appears above the 50 EMA. Does it appear above the 50 EMA? No, not just yet. But we're starting to see a profile of vectors appearing inside. Why all of a sudden this zone has this behavior right here? What's going on inside of that zone? This is where the vector candles tell you something is brewing in this area, okay? The logic says that if they're going to try and swipe up, the only next point of interest would be the daily open. That's what we would expect. The only way that we will get an invalidation of that is if Bitcoin breaks down and recovers this green vector, because if they actually clear this range at 27,294, Bitcoin is going to attack the liquidity down below. Then we'll be having a very important area of support, which will be this 26,870. But you don't know because you're not seeing it happen. That's the thing. You've effectively got to trade the unknown. And you're not going to know what a trade's going to do unless you take the trade. I can give you all the analysis I want. I can talk about VWAPs, I can talk about Bollinger Bands, I can talk about MACD, stochastics, RSIs, and all of that jazz. It ain't going to mean shit until you put the money on the table, take a trade, and get the feedback that the chart is giving you based on what you've done. Because quite frankly, all the information that you get or before you take a trade is deemed pointless unless you follow up and take the trade. Because you've got to come to a conviction. Probabilities work like that. What are the odds of it turning over and going in my favor? 50-50. Price is either going to go up or down, right? So based on my understanding of the marketplace, I'm going to go long in this instance. Cool. Now I'm looking for a reason to get out. Statically, if I say that price goes beyond this area here, that means I'm out of my chart. That means I'm out of my position. I've accepted that I will lose when it breaks this point. Can I accept that? Am I okay with that? Because if you put a stop right here and you see price coming down, and then you start doing this, as I said earlier, never move your stop. And then you start doing this, all you're then doing is just playing move a stop. That's all you're doing. You're literally moving the bus stop. All right? And the bus ain't stopping, bruv. Had you have closed your position and changed direction, instead of moving a stop, you would have been trailing a profit. Because you wouldn't be saying, hold on, well, look, it's not worked in my favor anymore. I'm wrong. Get the fuck out, change direction, and see if you're right. Because what I like to do is I like to probe trades. I want to see if I can be wrong as cheap as possible. The problem with trading is people come to the idea of trading and say, you know what? Make a quick $1,000 here. Yeah, baby. And they're 5K down. That's the problem we've got. Okay. Now, with that being said, you use a small position to get a feel for the market. Dip your toes in. Make sure there's no piranhas getting ready to snap your feet off. All right. Make sure there's no one there getting ready to stab you with an injection. That kind of thing. You're probing the market. You're testing. Emotionally, there is nothing there. Because you're not being triggered. You're not losing a lot of money to find out if you're in the right direction. If you see the move in your favor, you're adding confidence to your decision. You're getting the feedback. You ain't going to know shit about the move unless you get feedback about it. And the best way to get feedback is to enter in as cheaply as possible. Build your positions. Play it like that. You believe Bitcoin's going to go up from this point, test the daily open? Cool. I go long from a zone like this. I then wait and see. What am I looking at? I'm not looking at my balance. I'm not interested if I lose $1, okay? And if you get worked up about losing $1, trading is not for you. The only reason you would get worked up about losing $1 is the fact that the trade's not working in your favor. That's the only time you think, right, all right, I've lost $1. It doesn't matter, but the fact that I'm wrong on the trade is winding me up. And then you're going to go into a thing where you're going to start diving into why you were wrong, which is going to help you excel in your trading to move to the next level of understanding. The only way that you can improve your ability as a trader is to keep on trading. But if you keep trading and losing too much money, you ain't increasing the chances of you growing as a trader because you're not allowing yourself to grow, because you're becoming emotional on every single trade, because every trade that you've taken in the past is deemed as a loss. You're now looking at this next trade thinking it's going to repeat the same thing over and over again. That's the sad truth of trading. Once you come to accept that you could be right or you could be wrong and you're okay with it, that's where trading is a happy medium. That's where trading becomes boring, okay? If you get emotional about trading, the only time you should be getting emotional about trading is if you, for example, you went short from here and Bitcoin slumps all the way down to 21,000 and you've gone 100x short, you put the house down and you've got yourself a nice 70, 80 grand profit. Well done. That's something to be boasting. That's something to be excited about. Close the trade, done. But don't put the size down, the second you open the trade. You're going to be experiencing dog emotions. And you're going to miss important things that are happening in the chart. There could be something that happens on the 1 minute time frame, okay? And you're missing it because you're doing this, looking at the balance. Oh, it's going down. Or, oh, shit, man, I can't. You're not even looking at the chart. And then you're like, oh, it's going down. I'll put too much size. I'll be able to work with that. I'll just quickly sell a bit of crypto, turn it into USDT, put it into my margin. I should be okay. Then you take away the emotions because you've added to the margin. You think because you've added to the margin, it means that it's going to move. No, imagine what you're doing now, okay? And the thousands of other people are trying to do the same thing to protect their positions. This is why you're seeing a lot of these high block zones like here filling up. Because people are trying to protect themselves. People either adding to their positions, adding to their margins, increasing the odds of market makers swiping the liquidity, okay? It's all an emotional game, ladies and gentlemen, okay? That's what it's about. I'll give you a system that guarantees 100% win rate. And guys have heard me say this too many times, but the approach is there, okay? I promise you a system that makes you 100% returns. You'll be looking at me thinking, you're full of shit. Okay. Now, I give it to a guy. He wins 100% of the time. Congratulations, bro. I give it to another guy. I say, look, this is 100% win rate. He's like, okay, cool. He loses 100% of the time. What's happened there? The system clearly does the business. It's just the mindset behind it. You've got to give it a chance. Okay? Every day is it's a war, man. Trading is a war. You got to be in the arena for as long as you can. And the sad truth is when you leave the arena, there's someone else that's replacing you. That's the truth. Okay? Right. NASDAQ has made a nice little bold move to the upside. So we're going to pay attention to that very, very shortly. Let's just go into NASDAQ. Look at the NASDAQ 100 for a second. There you go. Stop run to the upside. Some 1 minute time frame. Go over to that point. I've still got liquidity. I've got an imbalance up here and a gap that I would expect them to try and take later on. That's where my head's at with NASDAQ. Going into Tesla. Tesla has gapped down a little bit, but we're going to hope that Tesla does continue with this narrative. Yesterday, the actual volume, look, the problem that I've got with this move to the upside is the volume. It didn't actually, look, the volume was below average. That's a problem for me, man. After that big move up, volume was below average. So that's a problem for me because I really need to see today bring the flavor and the proof that the market's going to keep on marking higher. We got any liquidity coming in right now? Let me just refresh this bad boy. They taking that gap for sure. Yep, okay. No worries. Mad love from the Philippines. No worries. Cool. All right then. So here we go. No volume coming in. Let me just go into some other altcoins. Let me just have a look at Ethereum for a second. Ethereum is holding out. Let's actually look at USDT. Where are the imbalances on USDT? Right. So a big drop. So we know that people have brought cryptocurrency. The same people are going to want to realize a return. So the logic would say that we would expect it to come up. But for the short term, I would expect USDT to come back down towards these zones. People ain't done just yet. Market maker is giving the clue. All right. This should come back down. Price should then go up and then look to come back down, which would then mean that USDT should be coming back up into this midpoint. So take this and go 50% of the vector. Remember, USDT is a psychological chart. All right. It's actually, in my honest opinion, BS because it's a psychological chart. It just tells me when people have done more buying of crypto and more converting it back to USDT. What I see here is more buying of crypto. So I know at some point they're going to want to realize a return on that. Or some of those guys will, okay? So with that being said, we're going to see a move up from USDT. Get that. There you go. Happy days. we're going to see a move up, USDT, at some point, to come back into this point. And then once that is done, NASDAQ, ripping it. Boy, got to be careful now. Hold on a second. Where's NASDAQ? Not really doing. I'm looking at it on EXO Charts. Just quick drop down. Yeah, that is flavorsome. I am feeling that right now. I'm looking forward to that bad boy. This should be very interesting. I'm liking that. Bitcoin is probably going to keep moving. Here we go. We got the flavor. Back into those vectors. Got to be careful now. We want to see if this is the proof of the move. Hold on. We want the daily open. They haven't tested it yet. So be very, very cautious with this. Your shorts should be working nicely now. Here they are. They're coming into the break of this zone. They break this zone. Bitcoin will swipe. Bitcoin will take that liquidity. Let me just, where is my Bookmap? There we go. Bring this back up so I can see you guys in the chat. Dixie breakout retest. Yeah, Dixie's going down. Dixie, yeah, I'm just... this is the truth. Yeah. Here we go. Right. So look, liquidity is there. And we know that for this move to happen to the ups... Look at these red orders coming in. So these are limit buys. Limit buys are coming in aggressively. So this could be a stop run. We know that's going to be the case. They've cleared it. They're breaking it. Careful. Wait for it. They're going to snap. They're clearing the vectors. The next vector point is down at this point. Where is it? 1 hour. Take that point. Where's the high? Go into that zone. We assume support at that point. Guy that's run the short. Be careful. NASDAQ is coming back up ever so slightly. Let me look at Ethereum for a second. Snap down. She's moving back up first rather than Bitcoin. See, there's Bitcoin coming back up now. I'm going to wait and see if that's a V-shaped play coming into play. They just swiped that liquidity on the Bookmap. Just have a look. So right now, these guys are coming in. Look, there's a huge imbalance. These guys are coming in right now to test the proof of this move. Okay? So logic would say sharply move back up, and then we'll have the proof of the move. Limit sales are coming in at 31%, so they're aiming for the sales. So they're going to reverse it back up. That's what the logic says. They just cleared that range. It's gone down. We're going to anticipate that they're actually going to try and reverse back up now. This could be the stop run. Let's see if that's going to be the case. What's good, bro? Can you give me the link for the free indicator? Just go into TradingView and just search Traders Reality. That's it. Search Traders Reality and you've got it there. Here we go. This is a sharp retrace back down. Look at that, man. Triggering the shorts, getting ready for a reversal. NASDAQ, you beautiful, absolute monster. Where are we at with NASDAQ? Come on. There we go. She's playing the reversal nicely. Bring that flavorsome move down. I'm liking this with NASDAQ. Could be a promise. Could be a promise on NASDAQ to continue back up if they do hold out on this range. Could promise. But it all depends on what happens from this wick right now. Let me go to 1 minute time frame. Blue vector, that's a problem. Okay. We want to see them try and hold out this vector point. Right. Let's see if they can actually hold out on here. Bookmap. Limit buys are being absorbed right now. It's 24% positive. Let me just have a look at EXO Charts for a second. Where's Bitcoin in terms of its value area? So let's bring that over here. Ah, come on. Please. There we go. There we go. Right. So Bitcoin now is trailing at the value area low. Okay. This is consistent with reversals. All right. So we really need to see commitment coming in at this point. Profile says 1,700 on the point of control. But looking at here, got 1.1K right there at 27,355, which means that if contracts come in at that point, the point of control could actually change. So that would then restructure the whole profile. We're trying to effectively work out if value is going to come into play on Bitcoin at this point. We're waiting to see if they can hold out because you can see this gray area here. That's where value's coming in. So they're creating a profile. Interest is coming in at this point. We then look to the chart. Look, they're holding inside of this blue vector candle. If Bitcoin is going to release from this point, it will just flush back down. But the stop start could be the trigger to try and reverse back up. The only way that we will confirm the reversal is if they can manage to get away from this area, from the top point at 27,362, and as long as they stay within this range. That's what I'm looking at. Based on my experience of the hybrid system and the amount of times I've seen this stuff happening with Bitcoin, okay? Sharp move at the start of the open of the market, initiate the reversal back up. They do it all the time, okay? We're going to now wait and see if that's going to be the case. Let me go into other time frames, 20-minute recovery of the wick. I'm going to assume, look, they've gone back into the vector zone. Let me just see that on the 20-minute time frame, where my midpoints of the vectors right there. So that marries up all together. That's fine. We're going to wait and see if Bitcoin can hold. 27,328 is starting to work its way back up. 5-minute time frame. I need to see vectors. Come on. It's coming back up into value right now. Okay, so that's good news. Back into value. So they're lifting the ask. That's where the interest, the VWAP's actually moved up ever so slightly. So the logic says that we could actually see it go back up and test the value here and aim towards the value area high, because that's what it does. It has to swing, okay? Finding value at each different point, all right? So stop run triggers the retail trader to go short, and you see this right here, 1 minute time frame. There's that little continuation right there. This is what you're looking for, okay? Let me just move this a second. This is what you're looking for on vector candle continuations, all right? You see the vector candle, mark off the midpoint from the high and the low, okay? Include the wick. And now you've got this zone right here, which could suggest that it could be a point of support. The stopping volume candle from here was a trigger by the market maker. Why? Because everyone went flipping short at this point. He got them triggered. But because he's been building his longs inside of these zones, he's loading up his longs at the lowest point at the highest range. So logic says that we should see price going up because he triggered retail to go short. He built his longs at the lowest point and then looked for the reversal back up again. That's what we're looking for. Have I just received a message from someone dearly beloved to me? No. I thought it was Steve. Never mind. Okay. Any questions on that? Can I change the color of the daily open to black? You should be able to do all of that. But remember, guys, look, we've got a monthly candle coming to an end in 1 day and 11 hours time. Remember, guys, as well, it's the last chance to join the Patreon, because that's going to be capped off on the 1st, and you will no longer be able to get access to the Patreon. You get all sorts of stuff over there in the Patreon. You get live trading videos. You get the masterclass sessions. Look, there's 70 masterclass sessions right there with various ways of trading the hybrid system. All right. There's lots of information on there. Ways to trade the Bookmap, market cap, introducing M's and W's, the New York Brinks, bringing it all together, scalping, New York reversals. Here's one for you. I'll give you a little bit of a taster. Here's the New York reversal concept. So check this out. All right. Go into this bad boy. Go into sessions. Now, here we go. Right now, you should not be trading by the law of the Brinks box, okay? The Brinks box is effectively the first hour and a half of the New York Open. The sweet spot to trade is at 3 p.m. UK time when the Brinks box finishes. What's the Brinks box? It's the money trade. It's what sets up the move. So when you're waiting for the move to happen inside of this box, you're waiting to see if they're finding their range. You're waiting for the manipulation. Well, have we had that? Of course we have. Look, remember, we want the daily open, okay? Price has come down, initiated the trap. New York, Brinks box, as you can see right here. Now we're waiting to see if the Brinks has been set up to effectively bring Bitcoin up. That's what we're looking for right now. Vector candle continuation zone right here. That could be what is setting up the confluences. At this point in time, the market could take a shit from here. That's the way trading goes. There is no magic ball for trading. It's about how well you familiarize yourself with the logic of probability. How often do you expose yourself? How often do you take a pair of aces against a pair of twos? How often does the aces win on the backs, on an all-in? 82% of the time, aces are winning, all right? But the player only needs to hit one out and he gets a 3-of-a-kind twos. Do that 100 times, aces are winning most of the time. Trading is exactly the same thing. Find a structure. Find an approach, a way that you understand the charts. Give it a sample size of 100 trades. Execute it to the T. Every time, 3 p.m., you wait, and then, bang, you place your trades based on what you understand about this setup here, okay? We've got the low of New York, which in principle has been formed. It's the most aggressive move at the start of the session. Could this be the low for the day? We're going on the logic that it is, because that's all I've got right now, okay? I can't do nothing about it. That's where it's at. So I'm going to highlight that range. Fine, cool, that's New York's low. Cool. I zoom out. I want to make sense of where the chart is. Look at this. I've got multiple sessions coming into play. This green area is Asia, right? If Bitcoin can get back up above, and look where it's shown support, Asian low, right? That's where Asia bounced from. Didn't do that much of a big bounce. But that is where support is in Asia. I'm going to assume that that's where support is going to be right now. Because at this point in time, the market did what it did and reversed from there. The market has a good memory. We don't know how many contracts got exchanged at this point. We have no idea. But we effectively, someone keeps saying to me, like, just burp, bro, right? I don't need to burp. It's just my throat gets dry. So I'm just addressing that to you, man. This point here is deemed as the support, right? The market has a good memory. So when it's inside of that zone, we assume that that memory is going to get triggered again. All I'm doing here is helping you understand how to approach the chart. Don't look at the chart from a pattern point of view first. Think of the psychology of what's going on inside of this zone. We just saw traders getting messed up right now because everyone went short. Now Bitcoin's moving back up. Now we've got a vector candle that we can go back into. So now we're adding value to the logic of our move. So let's go again. Midpoint. All right, let me just get rid of all my lines. Take the Fibonacci of that candlestick. Go down. Now where we at? Okay. So this is something that I explained to the patrons about the types and the styles of the midpoints of the vectors. We've got a wick down here, so we know there's interest in this zone. But the midpoint of the candle sits there, but that's where the vector is up there as well. So you're really looking for them to come back up into that vector rather than down here, because this move was the sweep. That was where market maker trapped retail to believe that range traders have placed their orders inside of this zone. They've set the breakout. There's your breakout. Gone back in again. Now, that's a bit frustrating for retail. But at that point in time, what was triggered? Millions of dollars worth of positions, okay? Now, all those positions might still be open. That means the margins and the liquidations are all up here. So now we're warming to the idea that maybe if this is going to be the reversal point, Bitcoin will start to move back up from this zone and shift out to the upside. Now we start looking at the idea of maybe we're now adding psychology. We're saying to ourselves, how likely is this zone going to trigger more interest for traders to go short from? Because if it did it right there, would market maker do it again? Because that would then solidify him coming back into the wick and reversing again. So we've got our low. So that's where I'm at now. That's my low right now for New York. I'm still in the Brinks box. I've got what? 8 more minutes before the Brinks finishes, and we're at the start of a new 1 hour candle. So now we're waiting for the proof, okay? If Bitcoin can hold inside of this low, daily open is where we're going. And that's just based on what we've got right here. There's nothing else. And if it doesn't play out, so what? That's the truth. So what? Next trade. No one is going to tell you indefinitely where it's going to go. I've got the balls to sit here and say, I believe Bitcoin's going to go up towards the daily open because I'm giving you a logic. You know? I'm putting it to the test. I'm showing you the hybrid system based on the way I understand it. The way the market's been behaving. Where's EXO Charts? Right. Where are we at? NASDAQ is just climbing up. That's doing its thing. We expected that. Okay? Look at Bitcoin right here. Starting something. It's working. Okay? We want to see go to the point of control because the open on the profile of Bitcoin is all the way up there. we can't dismiss the fact that there is an imbalance right here, okay? There's an imbalance. The book doesn't like an empty shop, okay? This is a shop right now. Now, this shop has got people inside the shop right here, and they're all looking around the middle point, okay? And they're like, yeah, man, I'll buy that. Well, what about that top over there? I like that thong, you know? That's what's going on. And they're all inside here in the cheap zone. Not the cheap zone, but the average price of everything. Well, they want to go to get some more expensive stuff. So they start going up towards this point. If interest starts to come in and they've got a nice new t-shirt, that's $1,000, that's going to be up here. So the market's going to be like, yo, people are starting to go over there, bruv. Like something, hold on a second. They want it. Like, we better go over there, man, before we, got to sell some t-shirts right here. Price will then come up towards this point. Then it will spend a bit of time in that zone. How many people can we get to buy this $1,000 t-shirt? Because that is the value area high. Okay? But they can't spend too much money all the time. So the market then has to come back down into value, start getting some more interest. If they keep it at that high point right there, that means that the guys are now shilling out these t-shirts, and they got to keep on shilling them out because for every person that's buying the t-shirt, someone's there selling it until there's no more people to sell. We're out of stock. That's where you get the reversals. The same shit just happened right now in the chart. Right now, there were some dirty, cheap t-shirts, like really nasty t-shirts, and people were buying them up, right? And they were like, I want to quickly buy this cheap-ass t-shirt, man. Come on, I want it, I want it. I am not going to pay premium price for this t-shirt. Comes back down, swipe, quickly give these guys a t-shirt, man. Just sell it to them for like 50 cents, man. Get these guys out of my face, man. Bang. It reverses back up. We had a shit ton of people talking in this zone about this t-shirt. They were so excited about this t-shirt, and they were paying 50 cents to the dollar on it, and they were like, yo, I've got myself a good discount. They instantly brought it back up into the value zone. The value area low is an area deemed as support, okay? Consistent with reversals. If you don't see the marketplace as a psychology, you're going to get slapped about. Why is there 1,000 indicators out there? There is an indicator for the indicator about the indicator that you brought. What the fuck is that? Now, I'm not going to discredit anyone that talks about or creates indicators because there are indicators out there that do serve, okay? But what I'm trying to convey to you all is there's the psychology behind the indicator. The person that creates the indicator knows the ins and the outs of the indicator. Not the same way. You will not know the indicator the same way that that person does because you haven't sat with the indicator day in and day out every single fucking day to understand how it works. You have to replicate that. You have to re-engineer it so it works for you because that person selling an indicator's personality might be suited to that indicator. You've got to get your personality to mold to it. If anything, become a hybrid and mold around it and try and improve it in some way or shape or form. Improve yourself with the use of the indicator. Bring it back to that story. An indicator that gives you a 100% win rate and you give it to two people, one wins, one loses. I'm talking too much shit. Ladies and gentlemen, make sure you check out the Patreon, get on the free course of the website, and I'll be checking in with you beautiful people tomorrow. Bitcoin does that nice little reversal. Peace.